Well, I think we've reached a nice point, but when Bitcoin passed $100,000 to $200,000, Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. It is got the highest volatility of any asset, but it's also got the greatest return.
Michael Saylor, the executive chairman of MicroStrategy, is widely recognized as one of the most bullish and prominent investors in Bitcoin. With a substantial holding of around 17,000 Bitcoin, MicroStrategy, a publicly listed software and business intelligence firm, has the highest exposure to Bitcoin among listed companies. In the past month alone, the company acquired an additional 155 Bitcoin for $5.3 million, a modest addition compared to its extensive Bitcoin investments since August 2020. MicroStrategy now holds 158,000 Bitcoin, with a total investment of $4.69 billion at an average cost of $29.5186 per coin. Saylor has consistently communicated MicroStrategy's commitment to a Bitcoin standard, expressing the firm's intention to continue acquiring Bitcoin for at least the next decade or two. His bullish outlook is rooted in a deep understanding of the significance of adopting a sound monetary system, especially given the potential for a surge in prices as global awareness grows. In a recent Bloomberg interview, Saylor predicted that, with forthcoming industry developments, such as the approval of a spot Bitcoin exchange-traded fund, Bitcoin could easily surpass previous all-time highs, reaching $100,000 or even $200,000. Moreover, Saylor welcomed the recent guilty verdict against FTX founder Sam Bankman-Fried, viewing it as a positive development that could contribute to the cryptocurrency industry shedding its Wild West reputation.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think it's an important milestone in the growth and the maturation of the industry. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters. And their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin. I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative. I think it's going to help everybody in this space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see Wall Street analysts from all these ETF firms and you see their education and marketing efforts come into the space, and as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium.
A frequently discussed point in the realm of Bitcoin and cryptocurrency is the notable volatility of the industry when compared to other assets such as gold and equities. Cryptocurrencies exhibit high volatility, often resulting in significant upward movements during bullish markets and substantial downturns during bear markets. While critics perceive this volatility as a drawback, many crypto enthusiasts argue the opposite. Cryptocurrencies uniquely endure 80% to 90% drawdowns, trade laterally for extended periods, and still manage to rebound, reaching new all-time highs when the conditions are favorable. This resilience and ruggedness underscore the industry's distinctive characteristics. Returning to the interview, Michael Saylor discusses the industry's volatility, the potential for an ETF, and upcoming developments in MicroStrategy's Bitcoin strategy.
Well, I think we've reached a nice point, but when Bitcoin passed $100,000 to $200,000, maybe it'll trade from $250,000 down to $175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for. I think that during this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class.
Take a look at the shares right now. They're up over 200% year to date. Could you use that to add more to your Bitcoin funds here?
We have raised more than $1 billion in the past via ATM offerings, and whenever we did it, it was accretive to our shareholders. This $600 million vehicle will allow us to engage in more capital markets activity. As we're selling stock at a premium and then buying the underlying Bitcoin, we're capturing a tax-deferred Bitcoin premium for our common stock shareholders. So we're very thoughtful about when we do that and how we do that. And sometimes we'll do it, sometimes we won't. It depends on market conditions and where everything trades.
In recent updates, Sam Bankman-Fried has been found guilty on all 7 criminal charges brought against him. The 31-year-old MIT graduate, facing a maximum sentence of 115 years in prison, was convicted of wire fraud and conspiracy, particularly in connection with FTX customers and Alameda Research lenders. The charges also include conspiracy to commit securities fraud, conspiracy to commit commodities fraud against FTX investors, and conspiracy to commit money laundering. The U.S. Attorney for the Southern District of New York, Damon Williams, described the case as one of the most significant financial frauds in U.S. history, emphasizing that Bankman-Fried perpetrated one of the largest financial frauds in American history. Following the verdict, Attorney Merrick Garland issued a statement underscoring that Bankman-Fried's belief that he was above the law had been proven wrong. Garland emphasized that the case sends a clear message to anyone attempting to conceal their crimes, asserting that the Justice Department will hold them accountable. Despite the conviction, Bankman-Fried's attorney, Mark Cohen, stated that his client maintains his innocence and will vigorously continue to fight the charges. What are your thoughts on these recent developments? Share your opinions on both the case and Michael Saylor's interview in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.